Hello, in this video I am going to cover mortgage terms. So a mortgage term is pretty simple. It is the length of the mortgage. Nothing more to it than that. As we all know, a mortgage is a loan that is taken for a house. It has a specific purpose this loan does, and it is not just house, any sort of property. It could be a flat, it could be a block of flats, it could be an office building, but it is for property, for real estate. So a mortgage term is just the length of it, basically how long you have to pay it off from the date the mortgage is taken. The date mortgage is taken to the end date, the repayment date. Obviously, you would usually be paying on some sort of regular basis, like a monthly basis, and then the idea is at the end of that period, you would have paid it all back. But you could always do overpayments as well, but that is the max that it is allowed. So let's use an example. If I want to buy a £100,000 house, I have, let's say, £10,000, which means I have a 10% deposit. Or another way of looking at it is there's a 90% LTV on this. I've got videos covering deposit and LTV, so feel free to check them out. Which also means if we subtract these two, we need a loan of £90,000. And let's say the bank gives us a mortgage term of 30 years. That means if I take it out in 2010, I have till 2040 to pay it off. Obviously, there will be a specific day and month that you have to pay it off by, but you can easily work that out depending on what day and month that you choose. So that's it. So the common sort of terms are usually between 25 to 35 years. I've seen some as high as 40 years, and you can get them as low as I think the lowest is like about 6 months, I believe. But most of the time you probably won't be getting it that low, because if that's all it's going to take you to pay it off, the amount that you need, you would just save up and avoid the interest. So 25 to 35 years, again, you could have a 10-year, you could have a 15-year. I mean, guess you could have 18 years. You usually have some sort of division, something that's divisible by 5, but there's no particular real reason for that. And the other thing is, the lower the term, all else how being equal, the higher the monthly payments. But the lower the interest in total paid, because obviously if you're not paying for it for that many years, there's less interest that can accrue. On the flip side, the longer the term, the lower the monthly payments. That's the incentive to have a longer term mortgage, because let's say somebody who cannot afford the payments on a 25-year mortgage, they might be able to comfortably afford it on a 35-year mortgage. But you will pay a higher interest over the duration of the loan. You can change the mortgage term part where you'll have to do usually some sort of remortgage to get onto another mortgage plan. Feel free to contact your bank or check out my video covering that. But that's it. That's really all a mortgage term is. How long you have to pay it off from the date of borrowing till the end date. So 35 years, 25 years, 10 years, whatever. So that's it. If you have any questions, feel free to join us on the Discord channel. There'll be a link in the description. Plus, there's finance channels on there. And as usual, I look forward to seeing you in the next video.